Right, let's take that discussion forward. Rahul Malani as well joins in on the show. A lot of banking names which are going to be in focus today. But Rahul, first, let's start off with ICICI Bank. Do you think the numbers are enough to push the stock higher today?
So first of all, good morning. In terms of ICICI results, the results have been ticking all the boxes. There is no complaint. But as far as the outlook is concerned, we believe that from here on, the ROA expansion levers are limited only to the operating leverage, which can help, but which will be partly offset by the NIMS moderation. So overall, we believe that from here on, the strong outperformance and further re-rating will be a gradual one, and which will be based on the sustainable performance and the quality of earnings. Because all the levers in terms of other than that operating leverage, we do not see any ROA expansion lever from here on.
When you say re-rating, what to your mind is a deserving P multiple or price to book for ICICI Bank?
See, basically, what is happening is if you look at the current multiples, they have been trading at around 2 times its 1 year forward. So if we look at if they continue to give in terms of if we look at the contingent provisions, they have maintained around 1.3%. So it is assumed that they are giving a sustainable performance in terms of, because in banking industry it is very difficult to sustain that 2% ROA multiple quarter after quarter. So it is likely that it is appearing that at least in the near to medium term, at least ICICI Bank would be sustaining that 2% ROA in terms of quarterly run rate. So basically, 2 to 2.5 times is a decent multiple in terms of which we believe that ICICI should get in near to medium term.
Break the HDFC Bank news for us. There are two things here. One, capital requirement norms have been eased by Reserve Bank of India, and then HDFC Life, that overhang of merger is no longer there.
Yes, basically, so a near-term rally in the HDFC Bank stock is possible on the back of this regulatory relaxation, because priority sector lending requirement itself is the biggest savior, because in terms of it will save around 7 to 10 basis points of in terms of ROA, because it would give a substantial advantage to the HDFC Bank. Had it been not received, they would have been able to. They would have to borrow. They have to find a good borrowers in priority sector for such large amount in next 8 to 9 months, and basically this the street was not factoring in this. Secondly, the permission to hold more than 50% in the insurance subsidy is more a relief for the shareholders of the HDFC Life in particular, because there would not be any sell overhang, because the regulation permits that you can hold below 30% or either above 50%, and the street was fearing in anticipation, because when in case of Axis Bank, RBI didn't allow to raise the stake, but as in case of SBI as well as in ICICI has the case, in case of HDFC Bank also the RBI has approved. And thirdly, in case of if we look at the inclusion of combined entity in MSCI indices will boost the flows. As far as the capital requirements are concerned, it will be a neutral to the ROA, because already they have certain liquid assets around the HDFC Limited and HDFC Bank both have around 50,000 crores liquidity additional. So overall,
Right.
1 lakh crore liquidity.
Right. Rahul, great to have you on the show this morning and analyze all the buzzers from banking. Let's see whether they manage to push the Nifty Bank higher, both HDFC Bank and ICICI Bank as well. On that